check out this reversal setup I took. I took this reversal setup right here on jump 100, and it was a beautiful reversal setup. Actually, I saw the setup late, so this was how the setup was framed, and this was the setup hit TP. So this was a reversal setup. Okay, so in case some of you don't know, I know some of you feel chart pattern, is it not? Yeah guys, chart patterns, they work magic, guys. They work magic. If you can be able to learn how to use chart patterns, you can be able to catch beautiful reversal setups. So today I'm going to be showing you traders how to catch chart patterns the SMC way, the smart money way, traders. Okay, if that is what you stick to do, you want to make sure you stick to this video till the very end, and you learn how to catch beautiful reversal setup using just the inverse head and shoulder chart pattern, traders. Hi traders, this is Mr. Promise right here from Green Promise Institute of Trading, aka Institute of Liquidity. As you all know, this is the first evangelist, world-class financial market analyst, institutional trader, and this is the very mentor who mentored your mentor, guys. Okay guys, do me that favor right now, hit that subscribe button right now, guys, and let's get straight to the chart, and let me explain how you could be able to replicate this. So you can see the setup by frame. So that setup, actually this was not how I framed the setup. This is a risk entry. So the way I entered the trade was I entered it off a confirmatory entry at this zone right here, and let me show you guys so you see it very clearly. So that's the confirmatory entry right there. You can see that was the confirmatory entry when I saw the shift of structure on a lower time frame. So I did frame that setup right there. So right here, guys, let me just show you guys what you want to look out for every single time. Remember chart patterns, guys. For those of you that have forgotten your chart patterns, let me just a quick refresher. Now for us to get this right here, I use this tool. You can get this tool, this head and shoulder, inverse head and shoulder tool right here. I'm using Deriv Synthetic, but you can get it on any platform you're using. You always have it right here, head and shoulder. So when you click your head and shoulder, now you get this right here. Okay, now remember for the head and shoulder, if for instance we get let's see, let me first draw a trend. Let's say we have a trend like this. Price is bearish, usually the formation of the inverse head and shoulder is in such a way that what is going to happen is, now there's going to be, if price is bearish, okay, so this is an inverse head and shoulder, sorry. So the formation of the inverse head and shoulder is going to be in such a way that if price is bearish, now after price did take out this level right here, after this low did take out the previous level right here, now the next level is going to cause a failure. Now in smart money we call that a failure to swing. Now this is going to fail to swing above this. Okay, now what is going to happen is, now it's going to come lower and also fail to swing below this right here. Then the next thing that is going to happen is there's going to be a breakout. Okay, sometimes it may not happen like this, because this maybe be same level with this, but we want to look out that this doesn't break this, okay, with especially a body of candle. Otherwise that is no more an inverse head and shoulder, guys. So it needs to maybe just wick it off, but it must fail to break above this, then coming back must fail to also break above this. So if price come and significantly break above right here, then this right here becomes a head and shoulder. Let me show you guys how you know there's an head and shoulder. So the head and shoulder usually is going to give you a shoulder, two shoulders, and you have your head not really your head per se. So you have the head. So right here, this is our left shoulder. So you can see if you draw it correctly, it's going to come out well. So you want to make sure you get what your point A is. Your point A, this is always your point A, and this is your point B right here. Now you get the next point right here. See the next point right here. So you can see how it's taking form. If you draw it very correctly, it will take form, traders. Okay, and now this right here becomes my head and shoulder pattern, guys. Okay, yeah guys, sorry guys, Control Z. So if you notice very closely, see what price did. So price did break. In this case, most times you get to see that this is always going to happen with a trend line channel broken. So you just get to see that a trend line channel will be broken like this. So once that trend line channel, okay, or that trend line is beautiful broken, price is going to form this now. So what you want to make sure you take note of is you want to make sure you understand the formation of your head and shoulder pattern. Very important. You want to see that you have a head, you have a left shoulder and a right shoulder. This is your inverse head and shoulder. You want to make sure that this right here, okay, doesn't close with a body above this, doesn't close significantly above this. Okay, you want to make sure that it fails to doesn't close above that. Okay, so you want to make sure it fails to close above that. Okay, so this is how sometimes you might see it on the chart. Okay, this is one way how you might see it also. Okay, let me just do this. Sorry guys, let me just quickly take this and duplicate this to the downside. Okay, like I said this is actually one way that you might see it on the chart. So price might not give you as perfect as it was then. So this price may give you as perfect as this. So not all the time that you might see it as perfect as this. Okay, all the time. So this is how you might see it on the chart. Okay, so right here you got your left shoulder, your head, the head, not your head, the right shoulder right here, and price broke out. So once we see this, now the next thing that is going to happen is, now how will you engage this now as a smart money trader? Okay, as an institutional trader, the next thing you'll be looking to do is, now you'll be looking to take this trade off your block. You want to wait for this trade to give you what, a retest to your to your block. Now there's how this trade most times will always retest your block. There are different ways to it most times. Okay, there's usually going to be that another block right here. Okay, another block right here, and you know that sometimes there could be, this is market, this is how markets behave. Sometimes markets may come to mitigate this block, may come to trade from this block also. Okay, let me just show you guys how. There are two ways to taking and trades using this inverse head and shoulder pattern. So either price trade from this right here or from this. So let me just show you guys what price would most time do. So what price will most time do is, this is what price is most times going to do. This is the two patterns you want to look out for every single time. So since we've understood that explanation, this is what you're going to see. Now there are times whereby price is going to what, is going to respect this first one right here. It means price will not come to this, price is just going to do this. Okay, price is just going to come right here and trade from this. Now sometimes price could leave like a liquidity, you understand, maybe engineer some liquidity then before trading to this, and kaboom, like this guys. Okay, yeah, let me mark my liquidity right here. So price could do something like this sometimes. Okay, or price may even make it, could be maybe an inducement, even maybe an inducement could be engineered liquidity or inducement. Price will just take out the liquidity. That's just the most important thing. The liquidity will be taken for price trade into that. Okay, yeah, so that's how you might see, that's one way you might see it. Okay, and the next way you might see this is this block right here. Price may decide, okay, you can't tell the institution what to do, price may decide to come trade from the block below this low right here, thereby using all the traders that actually bought above this at this block right here, using them as liquidity. Price may actually do this sometimes. Price may come down, take out these guys and continue buying. Okay, so this trade right here, when you see a trade like this, now what you may do is, where is going to when you enter the trade, you enter the trade from the other block right there. You enter the trade from the other block, just the way I did frame here. Let's come back to this. So just the way I framed right here, so you enter the trade from the other block. You can do your risk entry from the other block right there, risk entry from the other block, and your stop loss is going to be below this low right here. Okay, and you target the next possible high. So but most times, one of the things you must note about reversal setups like this is, reversal setups, most times would actually they have great possibility of giving you insane risk to reward, guys. Insane risk to reward. So sometimes, like some traders may have some certain rules, they have some fixed rules. So you want to backtest the strategy until you get to see, okay, the number of RRR that the trade is going to give to you, and you want to also make sure you have a trade management rule to how you manage the trade when the trade is going. Okay. So, but most times, price most times is probably sometimes going to seek to take out that trend line liquidity that actually caused that that trend line liquidity that actually did cause that break. How do we mean? So if this now was a trend line that was broken, so sometimes price will come take out that trend line. So that could be your TP ultimately in that manner. Okay. Yeah, guys, so just stay flexible whatever price gives. So quickly, let's get to see this thing on the chart. Let's see how we might see this thing. So this right here was a setup, and remember, guys, that reminds me, let me just talk about taking your confirmatory. So this right here is risk entry, but for a trader like you, okay, trader that is, if you're full-time in trading, or trader that is always going to be close to the chart, one of the things you want to do is traders that are always around the chart, they don't just take risk entry just like that. Sometimes you might want to take confirmatory. Now it depends on what you use for your confirmation. Now some traders use rejection, some traders use whether bullish or bearish candlesticks pattern, bullish or bearish reversal candlestick pattern, or you use a lower time frame shift of structure. Okay, so whatever the confirmation that you need to see before taking that trade, just make sure you see the confirmation before you pull the trigger, traders. Okay, so quickly, right here, the way I framed that trade was I framed that trade as confirmatory because I saw it late anyway. So that was how I framed the trade. So let me show you traders. This thing on the chart, beautiful. So this is 2-hour time frame, traders. So what I'll do is I'll just take out this, I'll delete this, so I'll just do it again so you guys will see. So there's no bar replay tool, so I can't replay the bars on volatility indices. So right here you can see on this jump indices right here, jump 100, there was this setup was called based off this pattern. Now let's quickly get to identify this. You can see that there's a beautiful trend line right here. Now even though you want to draw it as a trend line channel, you can see that we got a beautiful trend line channel right here. Okay, yeah guys. Okay, so but just keep it simple. I'll just delete this and just my trend line. Now look at these traders. Now what I'm going to do is I'm going to identify my head and shoulder pattern. Now usually I want to make sure that the my inverse head and shoulder, in this case this was an example of inverse head and shoulder, is pretty much the same thing. So the head and shoulder is just going to be the inverse of these traders. Okay, don't get it twisted. So it means if I invert K right here, this is going to be what your inverse head and shoulder. So the same thing, the same system, just as I explained, that's the same thing you're going to apply right here for your head and shoulder. Okay, so just similar to what I showed you guys. So I'll try and see if we'll capture example for head and for inverse head and shoulder pattern. Okay, so like I was saying, let's plot our inverse head and shoulder pattern. Let's plot it. So what I want to do is I want to pick my head and shoulder tool. Okay, now see what I'll do is I want to get this right here. So but I want to make sure I get on this spot. From this spot that actually led to the low. Okay, you can see it's just like marking your market structure. This point, okay, the high that led to this low, okay, that led to a high. This market structure, we are marking the market structure. What did you see? Market structure. If we get something like this on market structure, now a high and what? A lower high, and we got a low, and we got a lower low. That's what? Bearish structure, right? Good. Now see what now happened. Now this is just the psychology behind what makes this pattern very powerful. Now see what now happened. Now there was now supposed to be a formation of a high, but this high, instead of it forming a higher high, it now came and gave us so instead of it forming it gave us another high that was lower than this. Okay, but instead of it forming a low this time around that was lower, but if it gives us a lower low, it means we are what? Going to continue the trend. It's going to be a trend continuation. But see what price did. price did come right here and gave us a failure to swing below this right here, and instantly, guys, we got what? A breakout, and this right here gives us our beautiful pattern. Okay, so let me get to, let's spot our pattern very well. Let's draw it very well. Let's draw it well. Sorry, this is not touching, that's why it's not showing. So you must make sure it touch. If it touches correctly, that's when it's going to let it touch. Okay, so you can see, what is this? Your left shoulder, the head, and your right shoulder. So the head and shoulder pattern is going to just help you just draw out everything. It makes it very easy for you. Okay, good. So your left shoulder, your right shoulder. Now, because of this that failed now to swing below this right here, and we got what? A breakout. This now tells us that we are potentially shifting trend. We may now be in a possible uptrend. So what we wait for this retracement. So what do you want to do right now as a smart money trader? Now you want to look for the possible POI you're going to buy. Remember, I told us, I said, when you see your pattern, there are two possible things you want to do. You want to look out to buy. In this case, price did not break below that low that caused that breakout. So this was the scenario number one right here. This was the scenario number one. The low that caused the breakout was the other block price came to retest. Okay, there are times whereby price will come, take out this low that caused the breakout, now trading into the other low right here, the last low of the inverse head and shoulder. These are the two ways that price most times will trade from this particular pattern. Price will just come, wick off this guy, take them as liquidity, trade off this, and continue. So these are just the two areas that you want to be looking to catch price every single time. So in this case, this would have been how you would have taken this trade. So this was the scenario one. You would have framed it off that low that caused this break right here, and right here you can see nicely I was just targeting this high right here. So this was a beautiful trade. So but how I framed this trade was, I framed this trade when I saw a confirmatory. So price gave me a shift of structure, and the time frame I used was even it just even went down to 30-minute time frame. So I could have even used 15-minute time frame. Okay, you can still use 15-minute time frame. So but I used the 30-minute time frame. Let me just show you guys using the time frame that I used. I used the 30-minute time frame. So when I just saw that a swing high got broken, I saw a change right here. When I saw this change, now all I did was I just framed it. This was even how I framed the trade. I just framed the trade right here from that depth, and I was just targeting to take a nice 1:3. That was what I was just targeting. So that was just pretty much it, traders. So I think this setup, I saw something like this on V25. Let me show you guys. Let's look for some examples on V25. Sorry guys, let me clear out these. Please do not forget our pattern. Clear out all of this. So I'll show you guys this setup. Let me clear out everything so we see properly. Okay, now look at these traders. I'm going to transport this. Just remember our pattern. Just try and remember the pattern. Mind you, in this case, I had the bias anyway. Let me just take this out. So let me just explain this. So right here, okay. Now look at this. Now on this time frame, you can see that we got a beautiful and a nice head and shoulder pattern. How is it? Let me show you guys. Now I got a low that led to a low right here, a high, sorry, that led to a low. Now there was now a high now formed, and there was now a low that broke below this particular low. What did you see? Now we are bearish, right? Bearish is a bearish structure right here now, and all of a sudden I now notice that price now get to form a high. So and this high right here did not break above this. It means we are still bearish. But what price now did was, price now came down, now formed a swing low, okay, that failed to close below this. It failed. There was a failure swing, failed to swing lower below this, because if we had a break below this down, it means we'll continue the bearish trend. But instead, what price did was price came like this, broke out. Can you see that, guys? Nicely done. So right here we get what? Our left shoulder, the head, and our right shoulder right here. What is this? This is what? Our reversal pattern. This is our reversal pattern, what we want to see. And do you see how price came nicely? Price did mitigate what? Remember what I told us? I said price will mitigate that leg that caused the breakout. Price could mitigate that leg that caused the breakout. That's one way of seeing it. There are other ways where price will mitigate, to come and take out the low, just trading below right here. Okay, then continue. These are the two ways that price most times trade off this particular pattern. Okay, so you want to look at for other blocks within those zones. So see what price did right here. Price took out this low right here, traded into this other block right here, the other block that is around this level. So you want to look out for your other block, or maybe a lower time frame. So depending on how you so, but right here I can see demand zone right here. So price traded off this. So I was going to frame this trade, I would have framed this trade like this. So for me, I like doing a nice 1:3. I would have just probably done a nice 1:3 and get out of that trade. Okay, so but you can maybe sometimes, depending on how you take all of that, but if you notice price came down, it even came down to even take out this high right here. So that was even a beautiful 1:2, almost 1:9. Yeah, almost 1:9. Very beautiful trade, as you can see. A very beautiful trade, a very beautiful reversal trade setup. Okay, so now there's something worthy of note. So these setups, right, if you understand the concept I shared concerning liquidity sweep, this is still what similar concept, because if you understand liquidity sweep, it's going to be so easy for you to trade this concept. Okay, so liquidity sweep, going to be so easy for you to trade this concept. It just works like the reversal turtle soup model that ICT shared, kind of. Yeah, so that's just pretty much it. So let's see if we do a bearish example right here. So see right here, there's a bearish example, as you can see. So check out these traders. Look at this. Do you see there was a nice trend line channel right here, and okay, let me draw it out the way you see it clearly. Now this was a low that gave rise to this high. There was now, sorry, another low. Yeah, there was now another low that now gave rise to another high, telling us what? That we are in a bullish structure. All of a sudden there was now another low right here, and this low failed to go below this low. We are still bullish, but all of a sudden there was now a high right here that failed to swing above this high, and price broke out. What is that? A reversal, traders. A reversal. Anytime you see this pattern, this is always what? A reversal. Remember what I told you guys? I said price is always going to do what? Two things. Price is always going to come back to give you a retest of this pattern that caused your reversal. Okay, that caused the reversal. Price will come, trade off it, and what? Price will just continue selling to the downside. Or sometimes there are times whereby price would even come and take you out like this. Okay, just be ready and open for what? The second possibility. Now the second possibility is though the rare one, because this one right here, this one happens more than the other possibility, but the other one also, it does happen. There are times where price will come and trade off like this. Okay, though is rare, but that's the second way that most times price will trade off this. So price could do something like this and continue selling off. Yeah, and continue selling off, guys. So in this case right here, you see how price would give us a retest right here. Our stop loss would have probably been above this right here. Then we look to catch. So nice 1:6. A very beautiful trade right there, traders. Very beautiful trade right there that you would have banked smartly as a smart money trader. Okay, a very beautiful trade up that you would have banked. So and here is another example right here. If I was going to let's say cut this price action, let me show you guys this other one. Let me show you traders this other one. Okay, So check this one out also. This thing same pattern. So let me get our tool, our head and shoulder tool. Head and shoulder tool, let me add it to my favorite list. Okay, so the first thing we said you're going to notice is you're going to see that usually the trend line, the head and shoulder pattern is going to give you kind of like three this 1 2 yeah guys, you can see it's taking shape, right? 3, here goes it, the breakout. Did you see that? Okay, as straightforward and as easy as that. So you can see how we got so this right here was now the breakout. When we got this breakout right here, we're going to be anticipating that this movement that caused the breakout, the other block inside of this movement. Okay, now sometimes one of the things that you can do is you can just go down and just refine to maybe a lower time frame order block, that movement that caused the what's it called, you could just refine down to the unmitigated block around this. So for me, yeah, right here on 15-minute time frame, this would have been the zone I would have looked to actually engage that trade. Okay, so but all of this is still liquidity residing above you. So what you could do is that is it. My head and shoulder pattern is live, so I'm looking to catch it at that block right there and ride it. So sorry guys, so let's make it look good. Okay, yeah, I'm trying to mark out all the points very clearly so you see it better. Okay, so here goes the head. You can see these are shoulder. The shoulder forms the shoulder 1, left shoulder, right shoulder. So right here guys, so our short position tool will be right here. Then a stop loss is just going to be a little bit above this level right here, and we target for a nice 1:3 like that. A nice 1:3, and you just get out of the trade. Okay, that's based on my TP rule. I don't do more than 1:3. So instead, maybe I want to take an extended TP. So if you're taking extended TP, like we said, this is the pattern 1, right? So the pattern 2 also is also pattern 2 is going to take out this right here. We've been triggered in. Pattern 2 is going to take out this high around this trade other block right here. You can see we got what pretty much TP hit. You can see how price traded into the other block. Okay, and price what sold off traders. Okay, so that was pretty much it guys. So sometimes some of you now, this is a reversal setup, can't I just do extended TP? Yes guys, one good thing about this setup is if this setup goes great, sometimes if it goes great, if the reversal really goes, you are going to make more than 1:3. That's the thing guys. Like this setup is insane. So now one of the things that you might be asking yourself is okay, how where can I be able to maximize this setup? How can I be able to maximize this setup? That's what you may be asking yourself. Okay, so these are let's use this setup for instance. Now let's use this our jump 100 setup, so get to know where we can maximize this setup. So to maximize this setup, really one of the things that you could do is our pattern 2. I think I'll look for an example for our pattern 2 and show us. So I've not really seen any clear we'll go on the chart. Most of the times this is the pattern that plays out. Okay, so to maximize the setup, to the best place to actually take your TP. Okay, if you're not taking a 1:3 like me, so for me 1:3 I would have taken TP right here and wait for maybe the next move. But you're maximizing TP, you could maybe do this. These are some of the things I do. So see maybe your TP, you see you could take some profits right here, okay, and you need to have a trade management rule. Now it is believed, like I said the other time, I said it is believed that most times this movement right here, this trend line liquidity, that this trend line that broke out, that is broke out of, most times it is believed that this guy is going to take out this, okay. So most time this guy comes to take out this and use it as trend line liquidity, and use it as trend line liquidity before continuing to the downside, okay. Or to be on safer side, okay, it's best you can just take profit at this imbalance right here. There's an imbalance right here, so you could just take your profit at the imbalance right here. And look at this, guys. If you're taking profit at imbalance, would have been up 1:12. So you take 1:12 and you get out of that trade, okay. 1:12, you get out of that very trade. As easy and as nice as these guys. Easy PT, okay. Very simple, guys, very simple. So this now can just call this trend line liquidity. So trend line liquidity. Okay, so these are trend line liquidity, as you can see. I was gonna draw these out. Yeah. Okay, guys, so quickly let's just go let me show you traders this example, this second scenario. So this case study 1, please guys take note of that. Case study 1, and this now becomes our case study 2. So let's look at 4 examples for case study number 2, okay. I don't really have nobody play tool here, but let me try and spot it so you can see. So check this out, traders. Remember we said we'll have what? A low, okay, that's going to give back to a high, and a low that will be higher than the previous, and we're going to have a high telling us what this was a uptrend, and all of a sudden this beautiful uptrend, now there's going to be a low that is going to fail to go below this, okay, still maintaining our uptrend, but now there's going to be a failure swing, a high failing to take out this high right here, and we got what? A breakout. Now once you see this right here, this is a pattern. Remember the first pattern. In the first pattern, this right here, we're going to have our level right here to take what? Our entry. So but for the second pattern, I told you guys, I said price is going to trade what? Into this other block right here. So there's no bar replay to replay this. I'll replay this for you to see. So for this other one, okay, price is going to use these guys right here. So since there was no liquidity, there was no enough liquidity right here at this leg for price to take these guys and what? Continue selling. Now price is going to use these guys right here as the inducement, using them as what? As the liquidity to fuel this move. And now this is going to be your entry. So you enter right here, your stop loss a little bit above this high right here, this high, the head, and you target your nice 1:3, okay. Or you do what? If you are doing extended TP, that's what left on you. So just you target the possible trend line liquidity or the possible inducement. In this case, I would have targeted what? Possible imbalance. In this case, I would have targeted this imbalance. Better still, like I said. So can you see this? You see that if you target an imbalance, it would have been like 1:7. That was not bad. So this is a reversal setup most times, and I told you guys that if this setup goes great, sometimes it can really give you insane profit. So you can just have maybe some rules of how you would take your profit. So if you are taking maybe profit at base of the highs, so you could have taken some profit right here also. That's one way of taking. So some profit could maybe be taken right here, and ultimately right about this level, guys. So remember I said you could take profit at the imbalance right here, okay? Because sometimes price could feel the imbalance and continue reversing. That's how this market works. So or if you targeted this liquidity, you'd have been up 1:11. If you targeted this right here, you'd have seen that you'd have made a 1:12 nicely, guys. Okay, so this is pretty much it, trader. So you want to make sure you backtest this strategy over and over again, perfect how to use it, and I'm telling you, you're going to really enjoy using this strategy. Okay, so until I come your way next time, Mr. Promise right here from Green Promise Institute of Trading. So stay safe, traders. Stay peaceful, guys. Peace out. Give this channel a like, subscribe, and share this video to a friend that is going to help.